Good morning. It's Monday, 8th July 2024. We are welcoming you again to yet another episode of Pre-Market Commentary. My name is Vijay. In the next few minutes, I will trace out what happened on Friday and what we can expect today. Friday was a very interesting day because both the Nifty and the Bank Nifty opened with a gap down. The villain of the piece was HDFC Bank, which has been yo-yoing and confusing investors and traders alike. However, this is not unusual for HDFC Bank to do it because the people behind trading in HDFC Bank are very keen to do this and they do it successfully. They win both ways, both accumulation and then distribution. It's only the ignorant retail traders who get caught in this kind of a uh, in this kind of a trade. Now, what did the Friday's move tell us? The Friday's move told us that the bulls are in control. There have been many negative voices in the media who say that the market is topping out, market is extremely overheated, but there is still no evidence if you look at the price action. So in the morning, for instance, Nifty opened 160 points down and it has recovered all and closed in the green. Same thing with Bank Nifty. I think it bounced back about 600 points from the low, though it closed around 440 points down. It doesn't matter how many points it bounced back, but what it shows is that on every decline, there are people waiting to buy. Only time when you can say that maybe the market is going to have a correction is when the Nifty and the Bank Nifty close near their lows. But that has not happened since a few days, maybe a fortnight. Why do we need to anticipate that? What we need to do is go with the trend, however uncomfortable we may be, or move away, step back. Do not try to short this market when it is not telling you to short. Maybe it will tell us today, but the day has not yet come, even up to the last trading day, which is Friday. Now, if you look at what institutions did, institutions are both heavily on different sides. FIs sold about 1,240 crores. DIs bought about 1,650 crores. So net buyers as far as the institutions are concerned. And on Friday, the hero, especially in the last half an hour, was Reliance, where there was a news item which said that Jio will be coming with their IPO, which will be about 55,000 crores. Now, immediately, Reliance shot up by about 2 and odd percent, even though HDFC Bank was sulking. So the hero won over the villain on Friday. Now, over the weekend, Titan has come up with their guidance, not guidance, I mean their status report, which is not showing anything great. I would expected that they will report a little bit better than what they have reported. And we had taken Titan as a BTST, but I think we may have to struggle on that. Let us see where we go on. We'll go today. Now, if you look at sectoral indices, it was led by energy, basically because it was Reliance and ONGC. Today could be the turn of gas. So we are long in Petronet and we are long in GAIL for the last few days, hoping that these are fundamentally strong companies. Sooner or later, somebody's eyes will fall on that. Incidentally, I think GAIL has got a dividend yield of close to 3%. So that is as far as stocks are concerned. So today what we are expecting is we're expecting more of the same. That is, on every decline, you will see somebody coming in to step up and buy. It could be a different sector. For instance, on Friday, we should not forget that PSCs, public sector enterprises and public sector banks, did very well. They both closed on 1% gain on their indices. Then the others which did well, FMCG. For some strange reason, FMCG is very strong since the day the election results came. It also closed about 1%. Infra closed about 1.24%. Healthcare did very well. Healthcare and pharma both did well. It closed about 1.27%. The index I'm talking of. Energy closed about 1.6%. Oil and gas was the leader at 1.9%, close to 2%. Then at the end of the day, on Friday, we had the employment report. Actually, the employment report is quite poor. because the unemployment numbers have gone up, but employment numbers are showing on top line that there are more people employed than last month. But if you look at the data inside, you will see that the numbers are really deteriorating, which means now the market is expecting a rate cut in September. I will talk about the effects of what rate cuts do to the markets in one of my weekly sessions. Please tune in for that. This it could be this weekend or it could be next weekend. Today morning, Nikkei is opening 87 points up, and Hang Seng is weak. As with China markets extremely weak for the last few months, and Hang Seng, which tried to outdo the China markets, have now started a downtrend. So one has to be careful as far as the Hang Seng index is concerned. If somebody has bought Hang Seng B CTF, we have moved out of Hang Seng B CTF quite some time ago, which I mentioned it here. Oil is steady at 86. Then gold and silver, again my favorite stocks in the commodities. They are doing very well. They are taking a breather. It is consolidating, and silver especially can take off very quickly because it was struggling at $29. Now it has crossed 31.5, and now it is trading at around 31 and odd dollars. 32.6 is the highest we have seen in the recent past. That is, you can say, a 14-year high. If you look at US markets, as I said, Dow Jones closed 68 points high, S&P closed 30 points, and Nasdaq closed 165 points, even though Nvidia closed lower. So there too, they are not bothered. The bulls are not bothered. The bulls are in control, and you will see that buying will come on all declines, because now you have the budget date, which is announced as 23rd July. Again, markets behave very differently before budget than what most people are thinking. I'll come back to that with a special session probably by this weekend. So today we will still be buying on decline. We will look at oil and gas. We'll look at pharma, and for day trading as well as for delivery, we continue to buy textiles and paper. So whatever you do today, I hope it is successful. Thank you for joining